My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job's not just to entertain, but to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. Now, we know the market roared today.
That was easy.
Because the Senate just passed another $500 billion bailout. Well, bailout, let's say, of the last bailout, as it quickly ran out of money. That's why the Dow surged 457 points. S&P soared 2.29%. And the NASDAQ pulled at 2.81%.
House of pleasure.
The payroll protection program was supposed to be for small business, right? But in the end, a ton of that money ended up going to big businesses, public companies. I was a backer of this thing, and of course, now I feel like a chump. I guess I should be more cynical about politics, just trying to help small business. However, if you ask me, that wasn't really the big story of what's going on. See, there's something bubbling underneath right now, under the surface. And if anything, it makes me want to be less cynical about corporate America. That's right, corporate America. See, this market's rewarding businesses that have foresight and originality, and most importantly, heart. Now, I don't want to sound too sappy, but I don't know how else to put it. The stocks of good corporate citizens are thriving here. Mark Benioff, the CEO of Salesforce, loves to push the idea that business is the greatest platform for social change. He's a proselytizer, and he's right. Like it or not, business has the firepower and the smarts to make things happen. Benioff's not alone, which is why tonight I want to focus on real business people doing really great things that should ultimately help you make money as a shareholder. I used to scoff at the idea of doing well by doing good. I did. Seemed foolish, idealistic, a bad way to make money. Remember, in the end, I am supposed to be a dollar sign represented by a man. But we live in a new world now, a world where doing the right thing may actually be good for business. Why don't we start with Cramer fave Chipotle, which just reported a 35% decline in same-store sales. Yet saw its stock surge 12% today. No, bear with me. It's not counterintuitive. See, in the BC era, before coronavirus, evaluating stocks is straightforward. We plot the sales and earnings against the estimates, then do the same thing with the forecast, not anymore. Look, you got to be a total knucklehead to offer a forecast in this environment. If the CDC can't reliably predict when this pandemic, where it's headed, when it's headed, it would be pure hubris for Chipotle to make the attempt. So without that guidance, we have to look at other things, like the stuff Chipotle's put right at the top of its earnings release. And I'm going to quote, at Chipotle, investing in our people has always been the top priority. After all, they are our greatest asset. They go on, well, before COVID-19, we had industry-leading benefits for all employees that include free meals, paid sick leave, crew bonuses, debt-free degrees, as well as mental health concierge for all employees and their families, end quote. Chipotle paid millions in bonuses to reward workers. For why? For showing up during the COVID era. Why? Because it's part of their DNA. And you know what else is part of their DNA? Food safety. When I listened to this conference call, I found myself thinking that Chipotle's kind of like Taiwan, South Korea, the two countries that handled this outbreak almost perfectly thanks to their experience with SARS years before. So many restaurants, if they're even opening, are scrambling to become more sanitary because becoming a coronavirus hotspot would be real bad for business. Chipotle's so ahead of the curve here because they had some unfortunate food safety issues a couple of years ago that forced them to change all their protocols. If you have to go out to eat right now, I can't think of a safer place on earth than Chipotle. But why go in person when you can get digitized? You can get delivery. Ever since Brian Niccol took over as CEO in 2018, he's rolled out all sorts of different ways to get people food. For example, they've got Chipotlanes drive-thrus where it takes just 12 seconds to get your burritos. They've got a terrific nationwide delivery partnership with Uber Eats. Put it all together, Chipotle was perfectly positioned for the stay-at-home economy. Yeah, they even used the term, I love it, they said, people who are stir-crazy, yes, stir-crazy at home eating the same, people like Chipotle. And that's why the digital sales more than doubled in March, up 103% year over year. Digital now accounts for nearly 38% of the business, which is why it's more important than the fact that they had that 30% decline in same store. That's amazing. Even better, Chipotle's not pulling its horns. They're actually taking this opportunity to expand. They can do that. They got the best balance sheet in the business, courtesy of Jack Hartung, their fabulous CFO. Many of the real estate investment trusts that control strip malls weren't too crazy about the Chipotle build-out, but now they're the most desired tenant around at a time when the REITs are desperate for business. Put it all together, and I think they got a winning formula, and that's why I keep pounding the table in the stock. I've been adamant that it can go to $1,000, even though I got raked over the coals for being a cockeyed optimist every time I say it. Last night, the stock was trading at $786. Now it's at $882 and change, up 95 smackers, within striking distance of its pre-COVID highs. I've been beating this one since it was about 300, when we went 18 months after the last bit of bad news. Now listen to me, I can't stress this enough. Chipotle spent the last couple of years doing everything in its power to win back your trust. And in this period of fear and uncertainty, you know what? That was the strategy to make big money for you as a shareholder. Not the only winners. Snap, the parent of Snapchat's become the preferred way for bored young people to enjoy themselves between or maybe during Zoom classes. And that's why that stock jumped 36% today. Hey, glad I went positive on Snap a few months ago. Although I think CEO Evan Spiegel, I think he's still mad at me for being so critical when the social media company was struggling. I don't know. I can be tough sometimes. Whatever. Or how about Texas Instruments? Up nearly 5% after a reassuring conference call. Really reassuring. Where management just told us to break out the 2008 financial crisis playbook and they're confident things will be fine. I read, I said, like, geez, this was like pre-COVID. That ignited a host of semiconductor stocks, including Intel, AMD, NVIDIA, Qualcomm, and Skyworks Solutions. The group may stay hot tomorrow. Why? Robust number just this very evening from chip equipment maker Lam Research. But nothing was more spectacular than the numbers from a stock that actually didn't go up today, but that's okay, Netflix. Just like Chipotle, Netflix kicked things off by noting that they're giving $150 million to support of out-of-work content producers. Second, they agreed to reduce their bandwidth consumption at the request of countries that are struggling to meet broadband capacity in this new stay-at-home world. Can you imagine having to reduce or suppress the demand? What kind of product has that? Finally, they snared more than 15 million new subscribers, nearly double what Wall Street was looking for. Although management immediately clarified that this growth rate is unsustainable. That's them. That's that self-facing stuff they always do. I say not so fast. I'm betting this pandemic will have a long-lasting impact on people's behavior. Like Chipotle or Amazon, Netflix offers a superior product at a superior price. And I suspect the worldwide quarantine will be fabulous for word of mouth. Fabulous. Look at it like this. The company does this cool interview that's what they do for their conference call, where they force all their executives to name their favorite Netflix shows. And one's coming up. I was furiously scrambling down the names so I could stay cool with my kids for next Sunday's boozy brunch, my Zoom brunch. You know what it was? It was unorthodox. All right. Call was unorthodox. The show's unorthodox. They made a ton of content ahead of time, ahead of the coronavirus. Maybe that's just luck. Maybe it's brilliant preparation. I don't know. Either way, I think the stock is more upside, and it's nuts that it ended up pulling back today. But it had run hard into the cliche print. What else? On Monday and Tuesday, I told you not to sweat the oil meltdown because it was a financial fake-out. Sure, the oil stocks are horrible. Industry's in big trouble. But crude only went to sub-zero levels because of weird distortion in the futures market. Sure enough, oil came roaring back today. And while it's still bad, whoa, it's not destroyed what's left of the economy bad. And the stock's finally getting a little rally. You can exit again, bottom line. In a very tough environment, companies with ingenious leadership, with a heart, are doing well by doing good. Turns out rewarding your employees and protecting your customers, good for business. Just look at Chipotle and Netflix, both of which have more upside here because they understand that business is the greatest platform for social change. Ted in Virginia. Ted.
Happy Earth Day, Jim. Long-time listener, first-time caller. I'd like
All right.
To give a
Good to
shout-out
have
to
you.
my brother Todd, who's a big fan of the show.
Oh, wow. All right.
So I currently hold a small position in Union Pacific Railroad, and after ringing the bell back in November, I still show 100% gain on the shares. I'm interested in your thoughts. UNP reports tomorrow. I'm interested as a long-term position. and what you think about the railroad sector as a whole with the current COVID issue.
CSX reported a number that people like. Union Pacific, I think, is every bit as well run as CSX. Here's the way I would handle Union Pacific. I actually am tempted, even if it's not that great, I'll go back and forth with Stephanie Link on this group, I'd be a buyer. Why? Because I believe in the future, and Union Pacific is the future. Ryan, in my daughter's old home state of Oregon. Ryan.
A big Rip City booyah, Dr. Cramer.
Oh, done your way, partner. What's going on?
Hey, thanks for taking my call, and thanks for all of your advice during these trying times.
Thank you.
I'm a young investor, and I'm looking to get some exposure to the financial sector while the market is still down. I was wondering if you'd recommend buying one of the credit card companies, looking at a more traditional big bank, or should I pass on those and look somewhere else entirely?
No, I'm going to offer two options. I think you should either do MasterCard, which is incredibly well run, and that is owned by my charitable trust, or you can do PayPal, which is also incredibly well run, but that stock is up so much, I don't know. Maybe you have to wait for that one to come down a little bit. Why don't we get to Victor in California? Victor!
How you doing, Jim?
It's not a bad day, Victor. I skipped my lunch, though, and I'm hungry. What's up? Just pointing that out.
Oh, yeah. I want to talk on Expedia. I've been buying this week at 40 and 50. They went up to 60 in a matter of a day.
Right.
And I want to see if it's still a play. They got a good-looking balance sheet. I'm sure they got lower overhead than a lot of these actual hospitality leisure businesses, and they own all these websites that dominate the industry.
I'm not a big travel and leisure fan, but I am a huge Barry Diller fan. So I'm willing to let Barry Diller override my what I would regard as my more skeptical judgment about travel and leisure. So I'm okay with Expedia, especially with that new kind of recap they're doing. And there we go. Companies that are doing good are doing well. Companies like Chipotle and Netflix, and I think they've got more upside. On Mad Money tonight, as working from home becomes the new normal, how are the data centers handling the demand? I'm going to talk to the CEO of Digital Realty. How hot has that been? Find out how it's positioning itself in the new world. Plus, we keep hearing about Macy's and JCPenney's and Kohl's and others who are in trouble. I'm going to reveal why. But first, there's a major structural shift happening in the bond market, and you can make a lot of money off it. Don't miss my sit down with Market Access. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.